The profit plan has a similar structure to the income statement and is made up of two important parts: revenues and expenses. The revenue part of the profit plan looks at future revenue. Remember, without revenue, no profit and no return. Projecting revenue is not an easy task because several factors will affect the sales of the company. For example, macroeconomic variables like the growth rate of the economy, the rate of inflation, and interest rates motivate individuals and institutions to increase or decrease their consumption of products and services. Socio-demographic characteristics also play an important role. An aging population will consume differently or less than a young population, for example. In addition to these external factors, internal factors like pricing policies, the product and services offering and mix, distribution channels, promotional campaigns, and the sales force also have an important impact on the evolution of revenues. Based on the planned revenues, managers can then think about the types and levels of resources needed to create, manufacture, sell, and distribute the product and services, as well as to serve the customers. In the jackets business, the manufacturing expenses represent a large proportion of total expenses. Some of these expenses vary with the level of production and sales. To plan these variable expenses, it is therefore necessary to make assumptions about the cost of the underlying resources and on the planned efficiency. In other words, the relation between the input and the output. How much fabrics do we need per jacket? How much time do we need to cut, sew, and quality control a jacket? For the fixed manufacturing expenses, the planning is no easier. As these costs evolve in steps, it is important to know if the production equipment works at full capacity or not. For the non-manufacturing expenses like R&D, sales, marketing, and distribution, the planning process is similar, and it is necessary to understand the relationship between the sales volume and the consumption of resources. Planning is good and helps prepare for the future. It is also important, however, not to be a prisoner of plans and instead keep some space to maneuver when unforeseen changes occur.